Welcome to Markets Now. I'm Michelle Rook with Matt Bennett with agmarket.net. A lower day in the grains, higher day in the livestock futures. And let's talk about grains first, Matt. The pressure that we saw there, technical selling, or was it just, risk aversion in this market?
Yeah, you name it. Really, at this time of year, especially with a lot of the angst that you've got in the investment community, if you will, just money coming off the table seems to have been a theme we've seen a fair amount here lately. I think there's a lot of angst, if you will, with what's going on in the world. No question about it that, some of the money continues to come off the table. And so, you look at a really strong dollar, you look at harvest activity. There's a lot of factors, in my opinion, that are kind of keeping a lid on moving higher. It just seems like the buyer is not present right now.
But do you always say that bull markets or markets in general just need to be fed bullish news to keep going up, don't they?
Oh, absolutely. You got to feed a bull every day. And so, you had some, export sales to China as far as soybeans were concerned there on Wednesday. It wasn't the first time we've seen this lately. So the market didn't get super excited about it. The bean meal market has kind of led beans higher here the last several days. And, bean meal kind of fell off a little bit here at midweek. And so, just no real catalyst to kind of keep buyers active. And so, you got to have some sort of activity again, especially at this point in time. Harvest is kind of winding down in some areas, but it's still running awfully strong in others. So bean harvest is a heck of a lot closer to done than corn. It sure seems like corn has got kind of a path of least resistance, is lower feel to it. It's just buyers don't seem very well present at this time.
Yeah. And obviously, the corn market is going to see some harvest pressure here, but we do have a big storm that's going to move in. That's going to really slow things down, isn't it?
Yeah, you would sure think so. I mean, actually, we've had really good progress to date, kind of running hand in hand with the 5-year averages for both corn and beans. I think a little ahead on corn, just a shade behind on soybeans as of this last week, but certainly ahead of a year ago type levels. But I mean, we're ahead on both as far as 5-year, just a shade behind last year as far as soybeans are concerned. And so, whenever you look at that, if you do get all this weather, especially looking at the calendar, you could slow down substantially. Now, a lot of areas have been awfully dry. I mean, fortunately, during harvest, that's kind of what you want to see. You don't want it excessively dry, but dry enough that you don't get impeded by a shower here and there. But some of the totals that we're hearing with this storm certainly could have an impact. And I've got to hope that a lot of the growers that have got a lot out in the field still, don't get dumped on too much.
Yeah. You mentioned the meal market being a supportive factor here as of recent for soybeans, and we did score new contract highs in meal overnight, and then we kind of faded or fell off. Was that just some profit taking or some exhaustion in that market, or what?
Yeah, I do think that the market's just a little wore out. Buyers have been super active. You look at that chart and it's just been straight up, up almost $14 there on Tuesday. And so, I mean, that's a heck of a rally, especially to be posting a bean rally that on the same day was less than 10 cents. So bean meal's doing everything it can to kind of prop up this bean market. But I guess, you kind of run out of buyers whenever you run this hard, this quickly. And so, you've been putting percentage gains on this bean meal market that you don't typically see, especially back to back to back. And so I think there's a fair amount of exhaustion in here. Moving forward, I think it's a well-known fact. Argentina is not going to have a whole lot of bean meal to put on this market as far as the world standpoint goes. Yes, the U.S. is going to be crushing a lot of beans. There's going to be some bean meal available, but it's certainly changing the dynamics of this world export market whenever you start talking soybean meal.
Yeah, it's just a little disappointing, Matt, considering, we had that big meal led rally earlier in the year and, it's failed to move the market, much past the $13 mark. And then we ran up into chart resistance, didn't we?
Yeah, but Michelle, you got to understand that this world bean situation, as far as stocks is concerned, is going to be robust to say the least. And so, just calling for an average crop out of Argentina, which isn't anything to, last year they had just had an epic drought. I mean, just a massive drought. And relative to that, it's very likely that they're going to have a better year as far as production is concerned. Yes, there's still weather issues to consider in that part of the world, but let's flip over to Brazil. They're planting a lot more soybeans this year, and with them doing that, it's certainly going to give them a little bit of a wiggle room, if you will, if their yields aren't all that great. And so, it sure looks like world bean production is going to be very secure. World bean stock should be ample, to say the least. And given that, I think that it just kind of puts a roadblock into getting carried away with any of these rallies.
Yeah. Corn market. Technically, again, we ran up into chart resistance after we got above the $5 mark. I think 509, the 100-day moving average, stopped us out. Now we're back below 5, and we're back below some key moving averages. How concerned are you about the technical picture? Are we just still in our range?
Yeah, it was just 3 or 4 sessions ago that we had the highest close that we'd seen since August 1st, as far as December corn was concerned. And then you come in here, and obviously the buyers just kind of stepped back. I mean, they vanished, if you will. And you're in a harvest pressure for sure. I feel like the farmer though is going to be fairly tight fisted moving forward. You kind of see that now that you're halfway or farther in a lot of areas. Basis levels are starting to firm, and I think the producer's just saying, listen, we're not going to do much in here. But at the same time, you've got to have a buyer if you're going to continue to rally these markets, whenever you get up to levels you haven't seen in quite some time. And we just simply ran out of buying. So I think with the corn market at this stage of the game, you look at a couple of different things. You look at old crop stocks, new crop stocks. Demand is tried to rebound for sure, but those stocks levels are going to grow a fair amount year on year, from 135 up to 2.1 plus. You look at the world stocks, and I mean, you're looking at a massive increase in world stocks as well. And so, you really need a catalyst if you're going to try to rally this corn market. I don't want to be bearish, but it's just, buyers have to have a reason to step in and buy.
No doubt. And the corn market doesn't get any help from the wheat market. Again, down today. Seems like every time we get a little bounce, the funds come back in and pounce on that thing. But, was part of today just the fact that they are supposed to get some of that moisture in some of those areas down south?
Yeah, it probably is. I mean, my personal thought on the wheat market is anytime you try to get it figured out, it hands you your lunch. But it's a
True.
pretty tough market to figure out. And yes, I mean, you've got to, if you're trying to get a rally out of corn in the absence of outside information or information that's really going to help you, you look over towards that wheat market. And there's just nothing going on there. So,
Yeah.
my personal thought here is that at this point, it's a path of least resistance is lower.
Cattle market is trying to recover here. We were up yesterday or today after, Monday, the meltdown from the cattle and feed report bearishness. But do you think we can recover from here?
I do. I've been a cattle bull for quite some time. I actually, when we got closer to 200 on April, we got a little more cautious. It just seemed we tried several attempts to get up above 200. And my personal thought was that, what was on the other side of that is what a lot of traders were asking themselves, how much up could you expect? And so a setback was inevitable. Healthy markets need setbacks, but you look at the cattle on feed report, and it sure seems to me that a lot of folks are holding back, cattle, first of all. Second of all, a lot of these heifers continue to go into the feedlot instead of in the pasture, which I don't blame anybody for selling a 16, 17, $1,800 heifer, turn her into cash, especially with interest costs the way that they are. It makes a whole lot of sense to me. But what I would say is that with your total cattle herd size in the U.S. at 65-year lows still, that tells me that the cattle on feed reports are going to get progressively more friendly moving forward. So, I don't know that it's going to happen this next month, but I've got to think Q1 into Q2 of 2024 could be quite exciting whenever you're looking at this cattle complex.
Yeah. But was it all the cattle on feed report? Because we had sold off going into the report, and it seemed like some of these macroeconomic fears, maybe the Middle East conflict, that kind of set some of these funds headed for the door before that.
Yeah, absolutely. Anytime your equities market's struggling, the cattle market seems to follow along. And so equities market struggle, consumer confidence starts to wane a little bit. And there's still people out here talking recession, and for good reason. There's definitely things you could point towards that could tell you that in the next several months, you could see this situation get actually worse. And given the interest costs and, who knows? I mean, I don't think we're going to have lower interest anytime soon. It certainly puts you in a position where the consumer is could back away from the table, so to speak. But at the same time, fundamentals in the market tell me that I don't think this cattle market's going to go away anytime soon. I don't think the consumers are going to completely back off. I think demand's going to stay relatively strong. And so moving forward, I've got to think that we maybe overdid this to the downside for the time being, especially considering fundamentals.
Yeah, I think a lot of folks would agree with you about it being overdone. How about the hog market? A bounce today? Was it just short covering because we were oversold? Or, the funds have gotten out of a lot of their length there. So, can we start to stage a recovery there as well?
Yeah, it's possible. I mean, you've got to see really strong export sales whenever it comes to hogs. I mean, some of the issues we've had with Proposition 12. I mean, that's certainly played into this market. And so, this hog market just needs a friend. And my personal thought, actually, Michelle, is that if uh, cattle weren't as strong as what they were, I'm not so sure the hogs had been even lower over the last several weeks. And so, I think moving forward, you've got to have really good, strong sales. But with the funds getting more to, a flat position, that takes a lot of that pressure away that you've seen every time the hog market rallied. It seemed like they just stepped in there and sold. I don't know that you're going to see that kind of pressure moving forward.
Yeah, well, let's hope so because contract closed yesterday and just a slight bounce today. Let's hope it's not a dead cat bounce. All right. Thanks,
Yeah,
Matt.
absolutely.
You bet. Matt Bennett with agmarket.net. That's Markets Now.